Hi guys, welcome back to the sustainability. So I hope you are excited and you have learned a lot of things about the introduction of the sustainability. Then what are the key terms, and then further we have discussed a lot of things about the sustainability. Today we are going to discuss further about the global trends into the corporate sustainability reporting. There is one term into the corporate sector, that is corporate social responsibility, that is a company's act requirement. But one more term is taking prominence, that is corporate sustainability reporting. That is nothing but that is a sustainability only. And we are going to discuss the carrots and sticks reports. What were the findings in the 2020, and what were the discussions or reporting about the climate change, and what was the uh, task force taken place at TCFD, and then further what were the human rights and other things we are going to discuss in today's video. I hope you are excited. So global trends in corporate sustainability reporting, that is the framework and the instruments. If you see, there are varieties of international and local frameworks used by the organization across the globe for their corporate sustainability reporting. Only a few of them cover a wide, comprehensive scope spanning all the material issues, whereas some of them operate in specific sectors or on a single issue. As we discussed during our last discussion, there are a lot of frameworks available over the globe. Some of them discussing specific sectors, some are covering all the uh, matters relating to the sustainability. But GRI is the biggest framework that is being used all over the world. There are 20 countries that have 10 or more reporting frameworks in their country, with the United Kingdom, UK, having the maximum with the 21 of them. So in 20 countries, 10 or more reporting frameworks are there. So you can understand there are a lot of frameworks relating to the sustainability and how important the sustainability topic is. United Nations Sustainable Development Goals, UN SDG, that target of 2020 30, that 17 SDGs are there, is a key driver to most of the sustainability reporting framework. So most of the sustainability reporting framework, whether globally or in any particular country, are being driven by those SDGs, because these are the targets to be achieved. So all the frameworks are running around these SDGs. So as per the carrots and sticks report, so I have given that attachment in my previous video, so you can download, and there are specific reports. That is a very big report, so you can go on the link and also study that report in detail if you want. But overview we can discuss here. As per the carrots and sticks reports, out of 84 major economic by GDP, there are 614 sustainability reporting instruments. So you can see this is a huge number, of which 350 are mandatory and the rest 265 are voluntarily. So there are a lot of mandatory instruments, then there are voluntary instruments. There has been a considerable increase in the number of such frameworks since 2006. So since 2006, there are a lot of increase and lot of focus on the sustainability, when there was only 65. The mandatory reporting requirements are mostly associated with the public sector, government-run company, large corporation, MNCs, conglomerates, or listed company in the stock exchange. So all the frameworks generally started with the big companies or public sector companies or the listed companies in the stock exchange, whether it's New York Stock Exchange or Delhi or India Stock Exchange. Furthermore, the sector-specific and thematic reporting provisions are also becoming more common, like auto sector, chemical sector, to pharma sector. Likewise, the specific sector-specific frameworks are also coming. You see, green is the voluntary and blue is the mandatory. There's a huge jump from frameworks. So you can go through those reports in detail. The major providers of the sustainability reporting instrument that are used across different countries are GRI. You see, Global Reporting Initiative, Sustainability Reporting Standard. Then there is IFAC, International Federation of Accountants, ISE, that is Assurance Standards, ISE 3000. The Organization for Economic Cooperation and Development, OECD guidelines. If you have heard into the taxation also, there are very big OECD guidelines. So these are also the United Nations Global Impact, the communication on progress, and the International Organization for Standardization, ISO 26000, International Standard for the Social Responsibility. See, the most widely used framework in the world is the Global Reporting Initiative Sustainability Reporting Standard, having 93% of the world's largest 250 corporations report on their sustainability performance through GRI. It is used in over 100 countries to report sustainability. And where is it's the GRI? They into the Amsterdam, the Netherlands, has operational hubs in the Brazil, China, Colombia, India, South Africa, and the US, and through multi-stakeholder contribute. Additionally, GRI is also one of the conveners with the International Integrated Reporting Council, a global coalition of regulators, investor companies, standard setters, the accounting professional, and NGOs to promote communication about the value creation. How to create value creation as a step to the sustainability evaluation of corporate reporting known as integration reporting. The mission is to establish integrated reporting private and public sector as a business practice and envisions that the capital allocation and corporate behavior in line with economic growth and sustainable development. You see, the both the terms are going together, economic growth and the sustainable development. We cannot read in isolation. So what are the reporting requirement disclosure, which how ESG requirement is there. So ESG is a broader term. You see environmental, social, and governance, but it falls within the sustainability only. Then voluntary frameworks are growing and growing government mandates. So we have seen that there are many voluntary frameworks, but there is a growing government mandates. So what are the key findings? Reporting is improving. 78% of major companies in benchmark have improved their overall scores. In the baseline year 2017, materiality score, the state of SDG reporting, the state of integrated reporting, state of GRI reporting, emergence of SASB, then the future is digital. Then there is one more report of WCSD 2020 report. You can go through. This is also a very big report, and you will have great insights if you are more interested into the sustainability. 2020 report reporting matter maintaining ambitions amid disruptions by WBCSD evaluate the sustainability reporting across 3 dimensions: principle, content, and experience. So you see, this is the same thing. So materiality assessment is one of the important content element in sustainability reports. Most companies undertake material assessment that consider stakeholders' input. So who are the stakeholders? You everybody know that suppliers, employees, individuals, our customers, government regulators, everybody is the stakeholder to the company. Report finds a clear majority, 90% of the members reviewed material undertaking assessment. Further, most members, 81% disclose overview of the process, often publish a matrix of results within the report. So you see, what were the various reports issued identified that highest percentage of companies cite labor-related issues. Still, we have grown up so much, but still labor-related issues are being the highest issues, and with climate change-related issues and governance. So these are the 3 major issues reported, which continue to gain prominence. With 78% report now prioritize issues in these categories. A snapshot, you see 85%, 83%, 74% labor practices, human rights, climate change, then governance, and then after that economic product sustainability and society. You can go through that WBCSD 2020 reports. Then the climate change and carbon emissions. You know, growing use of vehicles and greenhouse gases are being generated, and the emission of the GHG forum human activity have been a topic of discussion over a long period of time and concern for the last 2 decades, due to which global warming is happening, and ozone layer has been depleted. So these all the things, and then floods, and without any season there is a rainfall, then the crop destruction is happening. So this is just all factors of the climate change. The use of fossil fuels for power and removal of vegetation has been under scrutiny in almost every part of the world. So the regulatory framework of emission reduction along with incentives from emission trading also has resulted in many organizations quantifying and reporting these data to the public. So you see incentives, you have might have heard the carbon credits also. This is also a form of that incentivizing that if you are reducing your carbon emission, then you will get the incentive. Then the Financial Stability Board consider climate change as a risk to the stability of the global financial system. See, we are living in the global ecosystem in that environment. If that environment itself not able to sustain, then how the financial system will work. Financial system is basically a subset of the global whole ecosystem. So this is how that things are getting interlinked, and this is why we want that sustainability should be read even that is a matter of your choice or not. But this is how we can broader link our that requirements and what are the sustainability aspects, and will give huge insights about all those things. The Task Force on Climate Related Financial Disclosure, the TCFD, on climate related financial disclosures. This is a very big term and very big framework on disclosures that was being made after that 2020 report on climate change matters. How companies should disclose the financial risk of climate change. TCFD releases an annual status report on climate and increase of over 80% in the noticed in number of organizations becoming TCFD supporters since the issue of 2019. See the that sport is also increasing. So number of companies reporting quality also increasing. However, company disclosure potential financial it remains low. Potential impact is anyway, this is still a challenge and you are not able to ascertain, but still reporting is increasing. Then we have the UN Sustainable Development Goals and reporting, that 17 sustainable goals cover all issues relating poverty, environment, society, culture, human rights, and economic growth. So whatever matters you think of public interest that are being covered by the 17 SDG, either directly or indirectly. Each of these 17 goals has specific goals, that is total 169 indicators to be achieved in 15 years time. When it was launched, that was 15 years, but now it's only 7 years, not even 7 years, 6.5 years. Most of the nations have made regulatory frameworks and guidelines to meet these goals of sustainability, and has resulted in the organization having elements of them in their annual corporate reporting. In addition to above, that is WCD, nearly half 53% prioritize SDG 5, SDG 8 with a little smaller number, SDG 12. So it depends what is like climate action 13, 12 is sustainable city 79%, 8 decent work, SDG 1 no poverty, SDG 14 life underwater, SDG 16. So 29% were the least likely to be prioritized. And further, there are human rights issues and reporting with vulnerable communities and displaced people in several regions across the globe. There is a need to have corporations to be responsible for human rights abuses in the area that they operate. So you see, this is again the stakeholders that we have discussed. Stakeholders is not somebody who is directly related to the company who is getting something or taking something or giving something back to the company. So this is how the company is operating in an environment, and if into that environment somebody is getting affected because of the company's day-to-day operations, then they have to take care of them, because ultimately they are using that global ecosystem. So corporates to be responsible for the human rights abuses. If any human rights abuses are happening in the areas where they are operating, that needs to be addressed, especially for the vulnerable communities and displaced people. The guiding principle of business, humans and human rights from the UN, the United Nations has a big role to play, establish the responsibility of the businesses to respect human rights, avoid infringing them, and remedy any negative human rights impacts they are involved with. So this was also a great subject, and that being taken care by the SDGs. But the whole essence is that corporations, companies, individuals, or regulators, whosoever is operating, they need to understand the sustainability and how they can improve and give benefit to the society as a large without extra exploitation of the resources, and being sustainable in their usage. So thank you guys. today's topic we are going to end here only, and in the next video we will take up the sustainable development. Thank you. Bye bye.